My next guest says investing overseas, including in China, will depend on the direction of the U.S. dollar, which he expects to fall during the new Trump administration. Joining us is Marko Papic. He's chief strategist at BCA Research. Walk us through this, Marko, and welcome.
Well, thank you for having me. I think if you think about the last 4 years and the pillars of American outperformance, certainly it had to do with innovation, technology, AI, the good stuff. But there were also two other reasons that the U.S. economy has outperformed. One was unchecked migration, and the other one was, of course, fiscal policy. And I think that no matter who won this election, but in particular with President Trump, both of those are slated to end, or at least have, a negative second derivative. In case of migration, I don't think we have to spend any time on that. That's clearly going to be checked. And then when it comes to fiscal policy, I think that the bond market reaction ahead of the election and potentially after is going to be a significant constraint on further fiscal profligacy. So that takes away the two reasons why U.S. outperformed the rest of the world by such a wide margin over the last 4 years, which will allow growth differentials, particularly if this fiscal stimulus in China does continue to add to growth in China. The growth differentials will start favoring some non-USD currencies.
What did the dollar do during his first term? And again, I'm not going to belabor the comparison then versus now, pre-pandemic, perhaps very different from post-pandemic U.S. economy. But what did the dollar do the first time around? Maybe we can show that chart as well.
No, I think your question is extremely cogent, whether it's pre or post-pandemic, and particularly because of the conversation you had on tariffs and questioning how much do tariffs actually matter. I have a very heretical view. I don't think that Trump will actually wage that much of a significant trade war with China. It's not something he campaigned on, in fact, and most of the numbers that are being thrown around by the media and us in finance are really based on just speculation. In fact, for the past 6 months, he's been talking about raising tariffs on particular companies to bring them to the U.S. That's a much different thing from broad tariffs against China. So what the dollar did is it actually went down significantly in 2017 when the U.S. was fiscally stimulating, which is likely going to continue to some extent, but not as much as last 4 years. And then when the trade war started, everyone saw this huge upswing in the dollar in 2018. And I think a lot of investors have, in a knee-jerk way, bid up the price of the dollar, expecting that tariffs will help the dollar. Number one, I don't think tariffs actually help currencies as much as people think. Number two, I don't think that there will be that significant of a tariff attack in China this time around.
And we just showed that longer-term chart where you do see kind of that upward move in the dollar. So you think it could be different this time around. You also think that maybe we're going to target companies more so than countries. Is that right?
Yeah, so I mean, it's not that I think this. It's that President Trump has been literally saying this. It's just that nobody wants to actually listen to what he's saying. So there's constant this push and pull where he says, I'm going to force BYD. I'm going to force John Deere. Again, indiscriminate, whether it's American, Japanese, or Chinese company. I'm going to force them to move their production to the U.S. And everybody keeps asking him, but what about 60% tariffs against China? He hasn't really talked about 60% tariffs on China for the past 6 months. It's all been about moving production to the U.S. This is a significant shift in what the focus of the trade war would be.